Hey, good afternoon, everyone. David Guy here with David Guy Enterprises and Winning Options Trading. This is a quick video just to show the spreadsheet, which shows the performances of the different watch lists that we look at. The first section here are on the stock market indexes, and also included in that we have the VIX, which is the CBOE Volatility Index. That's a Chicago Board of Options Exchange Volatility Index. So it tells us how volatile the market is, the S&P 500 market. And it's relatively low right now, 15.69. It was up today 6.3%. So, if we get a spike in this, we're going to see a pullback on the indexes typically. So that's that. The Nasdaq composite that was up 0.84% today. That was up the most out of the large indexes. The S&P 500 up 0.47%. The Russell 2000, those are small caps, up 0.34%, and then the Dow 30 was up 0.11%. So the only index here that we show here that was down is the Nasdaq 100. Those are the largest 100 non-financial NASDAQ composite stocks. And so if we look at the indexes here, as far as the major indexes, we're also going to consider the NASDAQ composite, the SPX, and the Russell 2000. Of those three, they're all up. The Dow is only 30 stocks. That's up. So that's four indexes up. And then the 100 stocks in the NASDAQ 100 are down. So overall, the trend obviously on the index is up, but we have to watch the volatility. As that goes up, the market typically will pull back. And we're due for a pullback. We're at all-time highs, and it's normal to have pullbacks when we reach new highs. So I'm actually looking forward to the pullback because that's going to give good opportunities to make trades. And then the next section here are the various sectors. 11 sectors make up the S&P 500 index. So the sector is a category of stocks. The XLC is the communication services stocks. XLK Technology Select. We have consumer discretionary, industrials, utilities, and then so on. And so we have five sectors up today, and then we have six sectors down. So obviously the trend there is down. So it's obvious we have a mixed market. In terms of the return, the communication stocks are on fire still, up 1.41%, technology 0.9%, discretionary 0.87%, followed by XLI at 0.46%, and utilities at 0.23%. And then the rest of these are down as we see. And then we're going to look at some futures contracts. We have natural gas down. That's a weak. Natural gas it's at its lows right now, so it might have a bounce, but I prefer a reversal in the trend before I start trading it. Crude light, that was up 0.95%, $63.01. Not too exciting to trade on right now. Gold and silver up again, super solid. Just can't wait for a pullback to take advantage of that. And we'll look for a bull flag setup. That's what the chart looks like right before the entry. That's what a setup is. The bull flag trading plan lets us take advantage of stocks moving up or commodities or whatever we're trading. It allows us to trade into uptrends. What we look for there are higher highs and higher lows. So when a stock, as an example, makes a higher high and then pulls back to a higher low, higher than the previous low on the daily candles, then at that point, we have an opportunity to enter into that security. So I'm looking forward to a pullback in both gold and silver and also on the indexes as a whole in the various sectors. And then if we look at the next section, these are what's known as the Magnificent Seven. These are the largest seven NASDAQ composite stocks. Some of these are listed on the New York Stock Exchange as well. Familiar names: Google up 1.02%. Up 4.34%. That's super strong. Tesla 3.61%. Amazon 1.45%. Meta, Apple 1.15%. Microsoft up, and so the only one that was down very slightly is NVIDIA. So 6 out of 7 Magnificent 7 stocks were up. And then last but not least, we talked about this. These are the ETFs, exchange traded funds, for natural gas, for oil, for silver, for gold. And if you were trading interest rates, you could trade the IEF. I would have to look at the liquidity on that. I'm not sure it's liquid as we would want. But then also the TBT, that's a way to trade short interest rates. So basically, that's the analysis from a statistical standpoint. We also do a market summary report, so I'll be looking at that later in the evening or first thing in the morning before the market, and that'll give a good summary in addition to this. And then last but not least, we're starting our trial service. It's going to be a discounted trial plan. And then after the trial period, which is yet to be determined, I'll make that decision later in the day, and then have that available for everyone tomorrow. But it'll be a trial service. It's not going to be free. It'll be maybe free for a day, but after that, you could take an extended trial for 7 days or 14 days at a discounted price. And then after that, it would be you would be, if interested, if it makes sense for you, then you would buy a subscription. So we're going to provide education, teach people how to trade various securities based on technical analysis of the markets. We combine that with fundamental, but we do use primarily technical. The chart tells us everything we need to know. And so we'll be teaching all about technical analysis. We'll be teaching on money management. We'll be, sharing specific trading plans so that you can identify opportunities and then trade according to a set of rules. We'll be talking about, options and how they work, and different types of things like that. And then the brokerage firm that I refer people to, if you're going to open an account there, I highly recommend it. You would use my referral link. But the reason why you would use Tasty Trade, bottom line is they offer first of all, the platform for the trading is highly rated, the best for options trading and some other categories they've won awards on. But to me, most importantly, there's a lot of good brokerage companies out there, but there's good ones, and then there's the best. This is the cream of the crop. The reason why I recommend Tasty Trade is because they give free education during market hours, 6 to 7, 8 hours a day on YouTube, and also on the sister website, tastylive.com. I'm not aware of any other brokerage firm that gives free education live every single day while the market's open and before the market and after the market. And so to me, it's a no-brainer. If you're going to be doing anything in life, you want to model yourself after successful people and work with companies that add massive value. And I can tell you firsthand, that's what they do at Tasty Trade and Tasty Live. They also have Tasty Crypto. And there's also an opportunity to attend various events throughout the country. Several more to go this year, and I'm sure probably a lot more this year, next year, I should say. And so you can attend these free live trading events and, construct a portfolio based on, Tom Sosnoff's expertise and how he does it. He's the founder of Tasty Trade. And, he's also the founder of Thinkorswim that was sold off back in 2007 to TD Ameritrade. So, and, his background, too, is he actually understands how to trade because he traded in the pits of the S&P 500 with many of the people associated with Tasty Trade and Tasty Live. So it's truly an A team when it comes to the money business. So I can't recommend them highly enough. And you'll get more details on that. But, hopefully this is helpful. And like I said, you can expect some additional commentary on today's market, both in the form of another report and also a video recapping today's action. And look for the trial offer. Sign up. You don't really have anything to lose. You have a lot to gain. And when it comes to your money, you want to protect it before the next major market crash. Because what Wall Street will tell you is it's okay to keep your money in the market. If it pulls back, it's all good. Eventually it'll come back. Yeah, eventually it will, likely. That's what history shows. But, the bottom line is if you have $1 million sitting in your 401k or IRA, why would you want to let that go to, let's say back in 2007, the market went from October of 2007 to March of 2009 from 1557, I believe it was, down to a low of 666. that was a 57% drop. So if you were invested in the SPY, the exchange traded fund for the S&P 500 index, you would have lost off of $1 million. You would have lost 570,000. You would have been left with 430,000, and then you would have had to sit and wait for it to come back for however many number of years. Wouldn't it make more sense, honestly, just to get out at 800,000? Not to get out, not to sell, because you don't want to incur taxes, right, or penalties on your retirement accounts. But wouldn't it make sense to hedge that portfolio so that when the market does go down, you get a return that's going to compensate you for the loss in your 401k and IRA? Well, that's what you can do with options. That's what you can do with futures contracts. You need to know what you're doing, obviously, right? But that's what you can do. And so it's a no-brainer. If you buy puts on the market, you know what your maximum risk is. It's the cost of the put. You can't lose more than that. So you just have to know what you're doing. And that's what we're all about, is providing the education. That's what Tasty Trade and Tasty Live is all about. And so, it's just about having a plan in place and protecting yourselves. People who have a lot of money, smart money, institutional investors, they have a harder time moving if they have a lot of assets in their mutual fund. But as individual investors, we have an advantage because we have a smaller amount. We can hedge ourselves and get out quicker if we need to. But smart money doesn't just sit there and watch their money disappear. They capture that money that's coming. They get rich. It's the saying: the rich get richer, right? So it's a no-brainer to protect your assets before market corrections, and it's a no-brainer to take a percentage of your trading or investment portfolio and put it into a trading account, because if you're trading options, if you're trading futures, if you're trading these types of securities, you can earn 10 times the amount you would earn based on buying the stock itself, as an example. If you buy 100 shares of a stock that's at $100, you're looking at $100,000, right? I believe, if I'm doing the math off the top of my head correctly. But if you could control 100 shares of stock for maybe $500, that makes a lot more sense to me. You just have to know what you're doing. You have to plan out the trade. You have to have a realistic time frame, buy enough time on that option contract. And so an option contract gives you the right to buy or sell a security at a specific price, but it doesn't obligate you to. And again, the maximum you can lose is what you pay for the call or the put option. Okay, and then there's other strategies which Tom Sosnoff is an expert on, and his team there at Tasty Live, and they'll teach you strategies on using options where you might buy something and then sell something against it. I mean, there's all kinds of strategies, and you can actually be a seller as opposed to a buyer, and make money that way too. It's a great way. So Tasty Trade and Tasty Live do an excellent job. They're experts on trading, and they have all the technology, all the education you need. And for me, I use those strategies, but I also use directional strategies, which is why I analyze the market using technical analysis. But I also get high-level data so that I can look at where mutual funds are putting their money in. If I can find the stocks where they're putting money into, I can use that data and do better with my technical trading. And then also I can look at the fundamentals of a company because I pay for some high-level data. So the beauty is, with us, you don't have to pay for it. You're going to have the advantage of that insight should you choose to become a member. And by the way, education when it comes to financial services can be very expensive. I paid 35, 40 grand back in 2010 for my education. I'm aware of one company right now that charges $40,000 for an education. And, ours is going to be not that much. It's not going to be free, but it's not going to be that. It's going to be, in the, $6,000-$7,000 range. And then, and you can pay it monthly, quarterly, semi-annual or annual. If you pay annually, you're going to get a bigger discount. But, the type of education you're going to get, it's world-class. It's a PhD investor trader education. So anyways, I appreciate you watching. Stay tuned for additional content. We set up our new YouTube channel, and that's where everything's going to be. It's winning options trading. God bless.